I just calculated my dividend growth rate, and as you can tell by my excitement, it is very exciting. So in this video, we're going to break down how the heck dividends can create a work optional life for you, your family, your friends. I want every single person watching this video to start building their passive income stream, which will turn into a giant river, which will cut the path of everything in your... Okay, I'm getting carried away. Let's just start this video. Drop a like, and if you're not subscribed, make sure that you're subscribed to this channel, Funancialism, for weekly updates on financially savvy content stuff. So let's begin. Not the greatest intro, but let's get to the greatest content ever. So in 2015, I started investing in stocks. I got a whopping 4%. Wait, 4%? That's too good to be. I got 4 pennies. I got 4 Abraham Lincolns in 2015. But the very next year, I got $130, right? So that's not the cool part of the story. The cool part starts in 2017. In 2017, I got $219. That means my dividend profit increased by 41%. And guess what happened the next year? The next year, my $219 turned to $351. That is a 38% growth in the profit. Now, let's take a look at the following year. I got $688, which is now a 49% increase in the dividend profit. Now we go to 2020, the year where market was crashing, everyone was panicking, selling their stocks. What did your boy do? I just kept on buying stocks. I ignored it and just kept on buying like I always bought. In fact, I bought a little bit more in March. I increased my investment by about 50% just for that month because that triggered my long-term investing rule, which is when the markets crash 30%, that month that they crash that 30%, I will invest an extra 50%. Now, I don't think that that will happen too often. Otherwise, I will burn out of my emergency fund and any savings that I have. So that is a very, very rare event. Happens about every decade. Now, in the 7 to 8 years I have been investing, it's only happened 2 times, and both of them happened in the same year, 2020. So that only triggered my rule once. But during that year, my dividend yield, right? Usually in crashing markets, the dividend yield increases. So I received $1,373, which is a dividend growth of 50%. Unreal. Now, 2021, things kind of sunk back to reality, and I received $2,012, right? That's a bad thing? $2,012 a dividend payout? That is an increase of 32%. Now, in 2022, you might be asking, well, what are you going to get? Well, I don't know. The year's not over yet, but I am projected to receive about $2,100 to $2,200, which would be the smallest dividend yield growth that I have received. But let's just assume that I receive a 0% dividend growth. So now I will receive the same amount of money. Let's just assume that. Now, for 2023, I am estimated to receive $2,800-ish as predicted by Merrill Edge. That brings my total average. I'm gonna leave out 2023 for now, and I'm just gonna look at 2015 to 2021 since those years are complete. 2016 to 2021, because in 2015 I just started, right? It would be unfair to count the transformation from 4 cents all the way to $130. That's like infinity growth right there. But my average return average growth on my dividend is 42%. But let's be a little bit more realistic. I'm gonna add a 0% growth for 2022 and assume that I will receive the same amount of dividend. That brings my average to 35% growth. Now, here comes the magic part of dividend investing. And again, that's not even my main strategy. That's just a side strategy that, especially during recessions, especially when the markets are like this, I am buying more dividend paying companies. I did that in 2020. I am so happy that I did. And now I am doing it again in 2022. That's why the more you know about investing, the more cool journeys and routes you can take. So in 2023, I am estimated to receive about $2,700 if my estimated dividend growth rate is 35%. The following year in 2024, it is estimated to be $3,645. And this is where the magic starts to happen, the compound interest. Now remember, my portfolio is also growing at the same time, but these are the cash payments that for now I am ignoring, closing my eyes, and just putting it back into the market. Hopefully a sinking market. Hopefully for me, I don't want to be selfish. So let's just say the market goes up or down or sideways. It doesn't matter. These are the estimated payouts that I will be receiving. Now, in 2025, it is close to $5,000. In 2026, $6,644. 2027, we're getting closer to my goal of 2030 work optional life. 2027, we are looking at a few dollars short of $9,000. Then in 2028, $12,107. And believe it or not, this number is about to double in just a short 2 years. 2029, $16,344. And finally, 2030, $22,064, almost doubling what I received in 2028. And imagine I keep going till 2040, 2050, live forever, 3025. That Jonas Brothers song is going to make a comeback. Now, what the heck is this is the true magic. $22,000, right? What does that mean in context of my portfolio? Well, for those of you who've been keeping up with my journey, you know my goal is to reach $1.25 million by 2030. Maybe it'll happen, maybe it won't, but let's just say that it does happen. There's a high chance that it does happen, and if I miss a little bit, I miss a little bit. I'm not gonna cry about, having 900 grand, right? How many people have 900 grand? That's unreal money. My grandma probably never thought I would have that much money. So now that we can assume, let's just assume that I have that 1.25 million. Now let's also assume it's invested completely in index funds. This part is why you're gonna drop a like on this video. If it's invested in index funds that track the top 500 companies, ticker symbol VOO, it will pay out right now, currently it's paying out a 1.77% dividend. Now, in 2030, I am estimated to receive, by my own math, $22,064. That is actually 1.76% of $1.25 million. Isn't it amazing how the math works out that way? So I will be able to withdraw $22,000 per year while having my $1.25 million portfolio. Now, this is where you can apply different strategies, right? You might hold some of that in cash. You might hold some of that in bonds. You might hold some of that in Pokemon cards. You might hold some of that in dividend-paying stocks, index funds, whatever the case is. You're diversifying to meet your needs or whatever you think your needs are going to be in that time. But right now is the time to be as aggressive as possible. If you are between 20 and I would even say early 50s, it is time to be aggressive as heck and stack these dividends. This is the time to do it. I hope that this math inspires you. We saw how it works out perfectly with an index fund, and here we go. Let's see what will happen during this next decade, but don't forget to live a little bit in the moment. It's important to think ahead and use our imaginations, use our fantasies, but that doesn't mean that we should time travel only to the future. We should reflect on the past, right? I'm always studying 2008 when it comes to the markets. Stocks, by the way, like Dollar Tree increased by 60% during the Great Recession. Walmart went up 20% during the Great Recession. Definitely stocks are going to be skyrocketing during times like this. You just have to put your thinking caps on and really analyze the market, analyze human behavior on a mass scale, and you're human, so you're pretty much an expert when it comes to what humans do. And then from that point on, I lost my train of thought because I'm way too excited. So chugga chugga choo choo, drop a like on this video, and I'll see you guys next time.